In this video, I'll be showing you how you can trade Binance futures contracts as a beginner. Okay, at the end of this video, you should be able to do this yourself. I will explain all the concepts you need to understand to be able to trade successfully without making a mistake. And also at the end of the video, we're going to do a live example where I'll be trading live so you see everything in action. But first, I want to make a quick disclaimer. This is not financial advice. This is just for education only. Okay, so now let's dive right into this. So once you've signed up on Binance using the link in the description of this video, then you would go ahead to download the Binance mobile app. Okay, I'm going to be showing this on the Binance mobile app. So once you've downloaded the app and logged in, okay, the app is going to look like this. Okay, so what you're going to do is to come down to the bottom of this app. You're going to see where it says futures, so you're going to click on it. So that's gonna bring you here. There are a lot of things to start explaining immediately. Okay, so before you can do any trading here, you would first have to understand all of these things here. If you do not understand and then you come here to make any trades, maybe because some YouTuber told you or some guy on Telegram asked you to use their signal, then you are making a big mistake because you would be risking your money. Okay, never do anything you don't understand. Okay, so here the first thing would be to explain a few of these things here. So up here you will see where it says USDM, okay, and also you see coin M. Okay, basically what this simply means is that you can use stable coins to trade here. Okay, you're basically going to be transferring a stable coin, and the stable coins are USDT and Binance BUSD, the Binance stable coin. So those are the stable coins you can transfer to this place to be able to use this platform. That's basically what this thing means, to avoid some technical explanations. And this one right here means you can use coins. Okay, you can see it says coin M, right? So that means you can transfer coins instead of USD, right? So let's click on this so that you see what I'm talking about. If I click on that, you can see now that down here we've got BTC, so you could use BTC. There are other bunch of currencies you could use here. BTC is not a stable coin. Okay, so you could transfer BTC to this place to be able to trade futures on this platform. That's what this means. If we take it back to that place again, we could see now that the BTC has changed. Now what we have here is USDT. Okay, so when you're using USDM, you can use stable coins USDT or BUSD, but when you are trading on Binance coin M, right, then you could use other cryptocurrencies. Okay, so Binance has got a list of cryptocurrencies that are supported. So here represents the pairs, right, the currency pairs you would be trading, the contracts you'll be trading. Okay, so if I click on that, that's going to bring us to this place, and now we can see that it says USDM futures, right? Now you can see that we've got favorite, all, perpetual, delivery, BUSD, and all of these things. Okay, so basically what you need to understand is that these are the contracts you'll be trading. Okay, in this contract, if you look very closely, you can see where it says BTC perpetual. What this means is that there is no expiration. There is no expiry date for these contracts. Okay, so you could trade them and relax without fear of any form of expiration. Okay, so that's what this means. So you can see all of the perpetual contracts that are listed here. Okay, so some of them are not perpetual futures contracts on this place. Okay, so for example, to show you those ones, if I search for instance BTC, you can see that I've got this one here that says BTC USDT quarterly contract, right? And then if you look very closely, you will see that it's got a number, right? It says 1230. So what this means is that this contract here has an expiration and it's going to expire on this date right here. And how do you read this date? This means that on the 30th of 12th here representing the month, so the 30th of December, right? So this contract right here is going to expire. So if you look at a contract and you think you still have time, for example, I could still trade this one here because from the time of filming to this expiry date, I've got a few months ahead. Okay, so you could still trade it. Never trade a contract that is about to expire. Okay, so the next thing here is to know how you can transfer money to this place so you can trade the Binance futures. Okay, so and to do this, all you need to do is to come here where it says 0.00 USDT. You're going to click on that. So that's going to bring you here. So the next thing you would have to do would be to select the asset you want to transfer to your USDM futures wallet. Okay, make sure you are transferring to this. Okay, if I click on this, you're going to see the other options. So we've got your cross margin wallet, your USDM futures wallet, your CoinM futures wallet. I already talked about this. Okay, so we're not using this for the purpose of this video, so we're going to be using this wallet. So you click on this and make sure you are transferring to this. Okay, so and of course we've got the asset we want to transfer, and that's USDT. So all you would have to do would be to select the quantity of the assets you want to transfer. In this case, I want to transfer 10 USDT. Okay, so all you would have to do would be to click on the confirm button. So as you can see here now, our available balance is 10 USDT. Now the Binance platform has a lot of wallets. Okay, they've got the funding wallet, they've got the spot wallet. Okay, so you need to have your USDT in the right wallet, okay, in the spot wallet, for you to be able to do this transfer successfully. Okay, so if you don't know how you can do this, make sure you watch the video linked in the description of this video. It's going to show you how you can actually buy USDT and how you can actually get that USDT to be in your spot wallet. Okay, so let's continue. Now let's talk about leverage. As you can see here, I've got a buy button and a sell button, right? Which means this contract right here, I can buy or decide to sell. Okay, we're going to talk about buying and selling later on in this video, but now notice that my available balance is 10 USDT. Okay, so if I come here and say, oh, I want to buy $100 worth of Bitcoin, right? So I put $100 in here. Notice that down here I have a cost of 95.35 USDT. So Binance is telling me that for me to buy Bitcoin worth $100, that I would need to spend about 95.36 USDT. So this money here is what is called my initial margin. Okay, so this is the amount of money I need, and if I actually click on this buy button, the cost might differ a little bit from this. Okay, it might become 96 point something or actually 100 USDT, and that's because of fluctuations in price. Okay, so whatever cost that would be needed when I click this buy button would be my actual margin. So this right here is my initial margin or cost. By the time I click the buy button, whatever price required would be my actual margin. Now notice that I would need 95.41 USDT, which is bigger than my available balance. So this is where leverage comes in. So if I decide to click on this button here now, the 1x, and come over here and delete that and decide to go with 10x and click on this confirm button. By the way, I could slide this here to select the 10x or even use any of these leverages here, but let's start with 10x and click on the confirm button. So what this simply means now is that I've boosted my available balance. Okay, so if I put 100 USDT here that I want to buy 0.05 BTC, right? Notice here again that it says my cost is now 9.59 USDT, which means I can make this transaction. My available balance is 10 USDT. My initial margin or cost would be around 9.59 USDT. So notice what leverage does. Leverage boosts your buying capacity. Okay, I have 10 USDT. A 10x leverage would turn this 10 USDT into $100, which means I can actually make a transaction of $100. Okay, so if I decide to change this 10x to 20x, that means my buying capacity would now increase to 200 USDT. If I decide to change it to 100x, okay, 100x leverage, that means that my 10 USDT would increase to 1,000 USDT. So it is actually possible to buy Bitcoin worth $1,000 by using $10 initial collateral by simply using a 10x leverage. So what this leverage simply does is that it boosts your available balance. So when you're using leverage, you are simply borrowing, you are simply increasing your buying capacity, the buying capacity of the money you have here. So I believe this is well understood. Okay, if you reduce this leverage to 1s, what you're basically saying, hey, I want to use my available balance, I don't want to boost it. Okay, but the moment you choose anything more than 1, you are increasing the buying capacity of your initial money here. So you might say, so what's the benefit of doing this? Well, the benefit of doing this is that if I am using a 10x, okay, that means my $10 becomes 100. Okay, so that means I can buy BTC worth 0.05 here. So if I make a 20% on this 100 USDT, that would mean $20. Okay, and $20 added to this 10 USDT here would mean that I would have 30 USDT when I close the position. Okay, and the profit would even be bigger if I used maybe 100x leverage, right? That would give me the buying capacity of $1,000, right? So 20% of $1,000 would be $200, and $200 profit added to my initial 10 USDT, that would be 210 USDT, right? Imagine you made a loss. That's the negative part of using leverage. Okay, so let's say I made a 20% loss on this 100 here, that would be $20, and that means my account would be wiped out, because a $20 loss is even bigger than this money here, my available balance. So my position will be wiped out, my position will be closed, I will be liquidated. Liquidated means I have lost this money I am going into this transaction with. That's what liquidation means. If I'm going in with $100, I don't even need to lose 20%, because if I lose just 10%, 10% is $10. $10 would wipe out my initial balance, my available balance, because $10 is exactly equal to my available balance. I would be wiped out. Okay, so before you can trade on the Binance futures, you would have to select between these two modes. One of them is the cross mode, the cross margin mode, and the other is the isolated margin mode. Now we are going to demonstrate this with live trades, okay, so that you understand what it means. But before we continue, let's first understand what it means to open a position. What it means to open a position is simply you put in the amount of money you want to spend. If I put $50 down there, and then I select a leverage, and then boom, I click on this buy button right here, buy long. Okay, you could select sell. Okay, so if you click buy, then you have opened a position. So what has this to do with cross mode? If I put in 50 here, that means I'm buying 0.002 BTC. So you can see Binance is telling me that my initial margin or cost is about 3.84 USDT. This is the amount of money I would have to spend from my available balance with this leverage to be able to buy this quantity of BTC. So if this trade doesn't go in my direction, because I am on cross mode, I would lose this initial margin and also my available balance. My available balance should be around 6 point something. If this is 3.84, my available balance should be 6 point something. Now let's do this live. Notice my cost here is 3.84 USDT. I want to buy 50 and click on the 10x leverage. If I click on buy long, so you can see that's my cost here. So I'm going to click on the confirm button. So now the trade has been placed. So you can see it says positions 1. So I'm going to click on that. Before I started this transaction, it showed me an initial cost of 3.84, but what actually went into the transaction was 3.81. So this is my actual margin. The cost before I started was my initial margin, and the reason for the difference is what we call open loss, which is as a result of fluctuations in price. Okay, and then you can see here it tells me that this is my liquidation price. Okay, as you can see, I'm already in profit. I'm making 0.31% profit. Okay, so if I decide to open another position using this cross mode and decide to come here again and click on that and then select maybe ETH USDT. So let's click on that right there, okay, and then again you can see I am using a 10x leverage here. If I put maybe 50 here, you can see it tells me now that I would have to spend about 5 USDT for this trade. Okay, so if I click on the buy button and click confirm down here, so for the second position you can see that my margin is 4.99, but what it was initially was 5. Okay, so you can see that there's a difference. Okay, so as you can see here, my available balance is 1.18 USDT. Now, because I am in cross mode, what this simply means is that that available balance plus the margin I have here and the margin I have here, okay, and the possible profits I'm making now are all my collateral. Okay, they would be used to run this trade. Okay, if I get to my liquidation price, the liquidation price for this is this, the liquidation price for this is this. If I lose this trade, I will lose this margin here, I would lose this initial margin here, and I would also lose this 1.21 USDT balance here. Okay, they all share from the same margin balance. If this one is in profit and this one were to be in a losing position, the profits from this plus the available balance up here, like I said earlier on, okay, would be used to support these positions. Okay, now, but this is not the same for isolated. In isolated margin mode, what would happen is that if I lose this position, for example, the only money I would lose would be this margin right here. It wouldn't affect this available balance. Okay, so my actual margin, this margin here, remember I told you this is the actual margin. My actual margin is the only thing I would lose. I wouldn't lose the money here. And if I also lose this trade here, this 3.81 here, the actual margin, it wouldn't affect this available balance, and it wouldn't also affect this other trade. Okay, now if I click on this cross and select isolated and click confirm, now I am in isolated margin mode. Okay, if I put 50 USDT there, okay, using a 10x leverage, as you can see up here, and then decide to go long. Okay, that means I am buying. If I buy, boom, click confirm button. Now you can see that this position is open as before. If I reach this liquidation price, or if this trade gets liquidated, my available balance is not going to be affected. You can see I have an available balance of 5.20 USDT. This is not going to be affected because I am on isolated margin mode. That's basically what isolated margin simply means. I can also open another position. I can click on this right here and select ETC USDT. I want to go long. Okay, I could click on 10, I could click on 50, okay, and then click on buy. Okay, so I'm clicking on buy now, so I have two positions. So if I lose this, it's not going to affect this or the available balance. If I lose this, it's not going to affect this or the available balance. But in cross mode, if you're losing a position, your available balance plus this margin and the profit from this margin would help to support the remaining margin for this trade to avoid losing the entire trade. Okay, that's basically the difference between isolated and cross. I believe this is very clear with these live examples, so I'm going to close all positions. Now, the next thing we're going to look at is what it actually means to buy, or what it actually means to go long. Okay, we've been buying things, but we actually do not understand what that means. So when you're going long, what that means is that from your technical analysis, you believe that the price of Bitcoin is going to increase. Okay, you can see the price here. You believe that it's going to increase, maybe get to 19,500 or maybe $20,000. When it gets to that price, you make some profit. That's what it it means when you are going long. When you're shorting on Binance, you're basically selling. Okay, what this means is that you're predicting from your technical analysis that the price is going to drop. Okay, so you sell at a higher price and buy at a lower price. Okay, so and then you make some profit. That's basically how this is done. I'm gonna do a separate video explaining how to short and why we make profit even when we buy at a higher price and sell at a lower price. Okay, if you want to watch that video, make sure you are subscribed and turn on all notification bells. Okay, now let's move on to this next important aspect of futures trading. So if I click on this button here, so that's going to show me all of these things here. So we're going to look at how to use these functions here to be able to trade successfully on Binance. Okay, so let's start with the market order. So let's click on this market here. A market order basically means that Binance is gonna be buying Bitcoin for you at the next available price. Okay, so when you select this market order, that means you don't have any choice, right? So as you can see here, the price is fluctuating. They could buy for you at 19,270. They could buy at 19,2701. Okay, so you could buy $1,000 worth of Bitcoin at any of those fluctuating prices. So that's what it means. So the next one here I want to look at is the limit order, right? So let's click on the limit order. So you've done some technical analysis and you think that the price of Bitcoin is going to get to a certain price level and you want to buy from that price level. That is if you're going long, or you could go short, right? You could sell from that price level. Okay, whatever price you're going for depends on what information you're getting from your technical analysis. For example, the price of Bitcoin here now is $19,299. Okay, so let's say from technical analysis, I think it's gonna drop to $19,000. Okay, so what is gonna happen is I'm gonna clear this market price here. So I'm going to put $19,000 here. So basically what you're saying is that Bitcoin is going to get to $19,000. Then in this box right here, you're going to put in the quantity of Bitcoin you want to buy. Again, we're going to use $1,000. So what's going to happen is that once the price hits $19,000, your order is going to be filled and it's going to be displayed somewhere down here. You're going to see that your order has been filled. Okay. Again, it's important to note that you can't just come here and put any price you have. This information has to come from technical analysis. For example, as at the time of filming this video, this is Bitcoin chart, right? We are on a 4-hour time frame. Okay, as you can see right here, this is a trend line here, and Bitcoin has been respecting this trend line for some time, and I've also got another trend line up here. So from a technical point of view, I can see that this region here is an area of confluence. So what I would need to do is to wait for a confirmation. Okay, so and how do I get confirmation? I would possibly wait to see the next kind of candle that is going to form. Okay, so there are different kind of candlestick patterns that would form, that would trigger a decision. Okay, so I can see the candlestick patterns here, and I think that Bitcoin could still drop to $19,000 before respecting this trend line here. Okay, because it has respected this trend line for quite some time. So with this information, I would then have to put $19,000 here, or maybe 19,100, that Bitcoin could drop to 19,100. Okay, because the price is not yet there, you can see where it is. It is at 19,289. If I click buy, the order is going to be here as an open order. It's not going to be filled yet until we get to that price. Okay, so that's how the limit order works. Okay, so the next order type is the stop limit order. So let's click on that. Now, the stop limit order is very important. You could use it to take profit, and you could also use it to stop loss. So you could use it as a take profit and also as a stop loss. So how do we use it as a stop loss? Okay, so let's say you bought Bitcoin at $19,000 using either market order or limit order, as I explained earlier on. Now you could use the stop limit order to prevent any losses. Okay, how do you do that? This works with selling. Okay, so if you want to use it as stop loss, okay, so you're going to click on the sell button and you are going to sell. Basically what you're saying is, I know I bought Bitcoin at $19,000 because crypto is volatile. It could drop below the $19,000. Okay, so if that happens, I want to stop my losses. Okay, so you're basically saying I want to have my Bitcoin sold. So but the interesting thing here is that I have two price ranges here. You're telling Binance to sell Bitcoin when it starts trading between these two price ranges. Okay, so this way your order is going to be filled when this happens. So if you click the sell button down here, your order is going to be queued as an open order, waiting for the price of Bitcoin to drop to this price range. Okay, you could also use it to take profit. And to take profit, remember we bought Bitcoin at $19,100, right? So basically this time around, to use it as a take profit order, what you're going to be doing is, you bought at $19,000, you're going to change these prices here to $21,000 and $20,000. This is what your stop limit order is going to do. Okay, so you bought at 19,000. okay, if the price starts trading between these two price ranges here, I want to sell. That's what you're telling Binance. Okay, so another type of order you could use is also this one here, the stop market order. So again here, remember you bought at 19,000. okay, let's put $20,000 here for example. So basically what you're telling Binance is, I bought Bitcoin at $19,000, but when the price gets to $20,000, I want to take profits. Okay, so when the price is $20,000 here, Binance is gonna sell your Bitcoins, and it could be sold at 20,100, it could be sold at 20,050, it could be sold at 20,005. So it depends, because the market is fluctuating. So this again means that Binance is gonna sell at the market price. Okay, and you could get any of the prices depending on the fluctuations. And the next one here also is the trailing stop, right? So before I explain this, let's put in our values. So we bought at 19,000, so I want to put an activation price of 20,000, and then you can see 1%, 2%. I want to select 1%. So when you select this, basically what you're telling Binance is that, hey, I bought Bitcoin at $19,000. When the price starts going up and it hits $20,000, please, I know cryptocurrency market fluctuates. I cannot tolerate it going down by more than 1% again. So this trailing stop, what it's going to do is, if the price after hitting $20,000 decides to go down, the Bitcoin you already have is going to be sold if it tries to go down beyond 1%. okay, so this is it. The trailing stop never goes down, it follows the price as it goes, right? So if Bitcoin price increases to 21,000, the trailing stop is going to follow it. Okay, so if it tries to go down below 1%, your Bitcoin is going to be sold. That means you're taking profit immediately. Okay, so if the price jumps up to 25,000, the trailing stop is also going to follow it up to 25,000. What's going to happen is, from 25,000, if the price tries to go down 1% below the 25,000, your order is going to be filled, is going to be sold. So basically, trailing stop is a very nice way of helping you not to make a loss. Okay, if you're going long, then if you want to stop your losses, you can use the stop limit order, you can use this trailing stop, you could use all of those things I've explained. If you're shorting Bitcoin, then you are going to have to buy to stop your losses. Okay, so basically reverse the opposite of what I've been saying. Okay, so now, so if we come back to the market order right here, and you place a market order of buying Bitcoin with 1,000 USDT, so $1,000, and you want to buy Bitcoin at the current market price, okay, which is around 19,241, right? So you go long, you want to buy, and you click the buy button, right? So instead of switching this to the stop limit order, using the stop limit order as a stop loss or as a take profit, you could simply use this TP/SL function here. Okay, so basically what you're going to do is, you're buying at this price range here, you could set a take profit of $20,000. So basically you're saying, hey, I'm buying at a market price of 19,240. When the price of Bitcoin gets to $20,000, I want to take my profit. And if it falls below $19,000 and goes to maybe 18,500, that I also want to stop my loss. Okay, because if you're buying at $19,000, if it starts going down to this price level here, then you're making a loss. So you're basically telling Binance, hey, I want to stop my loss when it gets to this price. I want to take my profit when it gets to this price. Okay, so all you would have to do would be to click this function here and go long. Okay, so the same thing applies if you are shorting Bitcoin. You click on this button here and then you reverse the prices here. Now let's look at this. This right here is what you call the order book. This represents the prices at which people are willing to sell the asset in question. In this case, we are talking about BTC, Bitcoin. Okay, so people are queuing up with these prices. They are placing sell orders, okay, for these various prices, and this here shows you the volume involved. Okay, so and this right here, people are placing a buy order for these various prices. As you can see, it's constantly being updated. Okay, and you can also notice here that the prices at the bottom here are smaller compared to the prices up here. Okay, so these guys are queuing up to sell, and also these guys here are queuing up to buy, and this right here represents the current market price of the asset in question, in this case Bitcoin. Okay, so and it's also worth noting here that if you see a large volume, okay, for a particular price, for example here we have it's changing. Okay, if you see a large volume for a particular price, that could represent an area of resistance, okay, that a lot of people are queuing to sell their assets. Okay, and also if you see a large volume at a particular price here, that could represent an area of support that a lot of people believe that from there the price is going to go up, therefore they want to sell at that point. Of course, this is not a buy or sell signal. This is not enough. Okay, you would have to combine this with other aspects of analysis. Okay, go to your charts to understand what the price of Bitcoin is talking about before you can place a buy or sell. Of course, if you want to go to your charts, you might want to click on the symbol here. So here you would be able to see the chart, okay, and then make proper analysis. Okay, but this would not be good for professional analysis. You might want to use TradingView and other platforms to do proper technical analysis, okay, before you can place a buy or sell order. Okay, so before you trade on futures here, make sure you understand technical analysis at least. Now another thing very important is to be able to use the Binance calculator. Okay, so if we click on that symbol there, that would bring us here, and there are a lot of things you can calculate using the Binance calculator. Okay, so this PNL means profit and loss. Okay, this one means target price, this means liquidation price. Okay, and there are other things to calculate. These things are very easy. So if you want to calculate your profit, all you would have to do would be to fill in these details here. Fill in the current price of your asset. Okay, in this case Bitcoin, we are at 19,200. Your exit price, at what price do you want to take your profit, which is $20,000. okay, what quantity of USDT are you going into this transaction with, and in this case it's 1,000 USDT. okay, so all you would need to do now is to click on the yellow button, calculate. So immediately you will see the result here. You can see here PNL, you will be making a profit of 41.60 USDT. okay, but it is worth noticing here that your initial margin is 99.84 USDT. What this means now is that you actually do not need to have 1,000 USDT to be able to go into this transaction, and this is the power of the leverage I was talking about earlier on. If you can transfer $100 into your futures wallet because you are using a 10x leverage, this 10x leverage is going to turn that money into $1,000. Okay, so then you'll be able to make your transaction. Okay, so your initial margin is just 99 USDT, which is approximately 100 USDT, and that would make you a profit of 41.60. So you can also calculate your take profit, what your take profit should be. Okay, so all you need to do is to enter your entry price and then put the percentage profit you want to make. Okay, and then you click calculate. Boom, as you can see here, it is basically telling us that we should be able to take our profit at this. Okay, so you need to know these calculations before you actually start doing anything. Okay, so let's click on the next one. So using this plus and minus button here to select the right leverage again, and then if we fill in these other details here, the quantity, which is 1000 USDT, and balance, your wallet balance here, which is 100, because that's the amount of money you want to go into this trade with. Okay, and then you click on the calculate button. Boom, you can see here, this right here is your liquidation price. Okay, so once the price of Bitcoin drops to the point that the price equals 17,346.31 USDT, you are going to be liquidated. Your position is going to be closed.